If you had invested $10,000 into Alibaba at the start of 2025, in less than 2 months, it would have turned into more than $15,000 with some change. But this rally wasn't just about Alibaba. Many other Chinese companies like BYD, XPeng, Xiaomi have all seen explosive growth in valuations. Heck, even the Hong Kong Hang Seng Index is up 21% year to date in 2 months. Is 2025 finally the year for China stocks? So let's first offer a moment of silence to our fellow comrades that held through the entire Chinese stock bear market. You have suffered greatly, and our hearts go out to you. And with that out of the way, let's explore the potential reasoning behind this rally. And of course, attempt to answer the million-dollar question. Is this China rally just another dead cat bounce, or is this time really different? From how we look at this current development, I think there were 4 key pillars explaining this recent blowout recovery. First, technological advancements, despite all odds stacked against them. Secondly, shift in government stance. Thirdly, the re-underwriting of geopolitical tensions. And fourthly, corporate enlightenment. Let's try to break them down bit by bit. Firstly, it's the most prevailing narrative out there, trying to explain the recent rally. Dip in your ass, DeepSeek has been the X factor, reviving the vitality of the Chinese stock market. And I believe by now, you would have developed your own fair share of interpretation around this Chinese ChatGPT knockoff. Competitor. And in this video specifically, I'm not here to ascertain whether the data or the numbers being published by DeepSeek are legitimate, or even attempt to break down their cost attribution to understand whether they are truly 10x more efficient. And what I'll try to do instead is to explain why this is significant, at least from an investing story point of view. For one, this DeepSeek breakthrough actually came on the heels of constant geopolitical pressures, export controls, and just an all-out hostile handicapping approach to the entire AI industry. 2, they've made them open source so everybody can see it to believe it. 3, the entire allure of DeepSeek is their cost effectiveness. They might not do as good a job as compared to some of the frontier model innovations, but most of the time, users don't need the best in class, but just a cost-efficient solution. And we've just seen DeepSeek announce even more discounts that can go up to 75% off during off-peak seasons on their already cheaper prices compared to their US counterparts. Now, I understand, skeptics are probably still full of doubts, thinking that China will never be able to catch up, and all the efforts they're currently displaying are purely performative in nature. While I might agree in the near to even medium term, China's innovation will not be able to match the rest. But what people often underestimate is China's rate of adoption and iteration speed of the ecosystem of players. You're not talking about only DeepSeek, they're just the poster child. So DeepSeek is constantly pushing out new updates, and existing tech players in the entire ecosystem are embracing the entire technology into their software stack. Not forgetting the amount of data these companies have access to, plus government support to move quickly in this space. And boom, the end result is efficiency and productivity growth. At least that's how we see it playing out today. And to put things into perspective, Alibaba has just committed to invest over $50 billion on AI and cloud over the next 3 years. In the grander scheme of things, however, this $50 billion might pale in comparison compared to the US hyperscalers. So how much impact will this really have? I'll leave it up to you to decide. But do you know what surely have an impact? You smashing the like button for us so that YouTube knows you're enjoying our videos. Now, moving on to the second potential argument. Chairman Xi has recently made a significant and symbolic move, holding a symposium with top tech leaders, including meeting with the founders of Alibaba, Tencent, Meituan, Xiaomi, BYD, and DeepSeek, to name a few. So this meeting was the first of its kind since 2018, and the implicit meaning was wide-ranging. And the presence of Jack Ma was particularly significant, and it went semi-viral on Chinese social media. And especially so when he's no longer actively managing the company and is in no executive position to make operational decisions compared to the rest of the founders mentioned before. So in that meeting, Chairman Xi sent a clear message, and I quote, "Now is the perfect time for private enterprises and entrepreneurs to thrive, and some people to get rich first and then promote common prosperity later on," unquote. So he had probably hoped to restore confidence amongst investors and entrepreneurs alike. So this pro-business policy did not only start 2 weeks before with this symposium, but instead through a series of commitments and guidance to the market since last year, especially with the focus in the areas of fiscal and monetary easing, supporting the financial and property markets, increasing the wages of millions of government workers, increasing the budget deficit, and issuing special ultra-long-term treasury bonds, to name a few. And all eyes actually look towards the upcoming 2 sessions where the Chinese leadership will set the year's key economic targets and investors wait eagerly on the side, trying to determine how policies are moving forward, specifically targeted to consumption and businesses. Thirdly, while geopolitical tensions, especially trade relations with the US, remains a concern, I think the market's perception has kind of evolved over the past 2 months, and the initial fears of escalating tariffs has been tempered by a broader understanding that such measures are actually not used to single out China, but instead an attempt to balance the deficit for the US administration in general. And in fact, in a recent interview, Trump declined to give a commitment that the US will defend Taiwan and that he wants China to invest more in the United States.
I have a great relationship with President Xi. I've had a great relationship with him. We want them to come in and invest. I see so many things saying that we don't want China in this country. That's not right. We want them to invest in the United States. That's good. There's a lot of money coming in, and we'll invest in China. We'll do things with China.
Personally, I wouldn't even be surprised sometime down the line, Trump will be open to selling high-end chips to China.
I like China.
But for a much higher premium, because at least they control the tech and earn a boatload amount of money in the meantime. And this nuanced development is probably causing some investors to re-underwrite the risks perceived previously in the renewed Trump era. Lastly, just a small point to note, I think when you consider some of these better performing equities in the Chinese market, they've seemed to undergo some internal cleansing regime over the past 2 years or so. And they've either reprioritized into looking at their cost structure, relook into their investments and the returns associated with it, or even become more competitive and, more importantly, guided the markets with their dividends and share buyback plans, with some even issuing bonus dividends to reward shareholders. And this slew of actions have probably supported the valuations of these companies to some extent, which provided further confidence moving forward with a track record of being shareholder friendly. Now, here's the million-dollar question. Investors are not stupid, and the Chinese market has had many short-lived rallies in the past, and they've all deflated down after some time. So given how ferocious and quick this rally has been over the last 2 months, people are once again skeptical of whether this is a pump and dump or is this time really different. Fortunately or unfortunately, we don't sell crystal balls at Piranha Profits, so we can't know for sure, but here's what we know. Presently, I think there are real, tough challenges the Chinese economy is facing. Productivity mismatch, aging population, deflation, property crisis, to name a few. These factors have a direct impact on earnings growth, and the short-term recovery is highly dependent on the measures that will be announced in the National People's Congress soon. And we're definitely not in the business of speculating the size and the impact of the stimulus package. However, to compensate for the risk mentioned before, Chinese stocks in general have traded at some of their historical low valuations over the past 2 years, prior to this rally of course. Therefore, the grounds for the stock price covered over the last 2 months just represented the forward-looking nature of the stock market in general. And there are probably more investors expressing their optimism about this recovery than not, hence the rally. And with this clear improvement in sentiments, the rally can happen really quickly, especially when coming from a relatively low base. And if you ask me whether Chinese stocks are still a buy today, I'll first urge you to consider the downside before considering any potential upside. Don't forget, you are still dealing with the same stocks with the same perceived risks, such as geopolitics, which might or might not include some potential banning, the flip-floppy regulatory regime, the Chinese market competitiveness, the variable interest entity structure, the communist regime, and what have you not. So unless you are perfectly comfortable with everything that we've mentioned, then you can probably consider buying Chinese stocks. And I said probably consider. That said, we do view many of these sentiment shifts as signals, probably more useful for traders that are trading in and out of the Hong Kong market. For investors, I think the focus will always be the same. Focus on the underlying company's mode, fundamentals, business execution, and ultimately the profits they can deliver in the future. So looking at their valuations today, they are definitely in their multi-year high when comparing across the bear market period, but still way below their pre-2021 glory. I mean, you don't say. But from an absolute valuation perspective, if China on the aggregate does recover as expected, companies continue to reap productivity and efficiency gains, I think some of these popular companies are still pretty undervalued, considering the scale, the execution, and the profits that they might potentially reap. So you really need to test and look hard at your investment thesis and expectations towards these Chinese companies and estimate accordingly. All else said, do size your bets appropriately to what you're comfortable with, and don't just FOMO in just because you see the charts print green candles every other day. So with that in mind, this is CK from Piranha Profit signing off. Till next time, keep winning.